Welcome to Drill Down Earnings. We have the latest quarterly results from Hewlett Packard Enterprise. This is the business story behind one stock on a move. Although strangely, the stock isn't moving anymore. Let's talk about that. I'm Chief Market Strategist of Epistrophy Capital Research, Cory Johnson. And Hewlett Packard Enterprise earnings are good. I'm not used to saying that about Hewlett Packard related things over the years, but this is another good quarter from HPE. Management really seems to have this thing humming well. Numbers are a little bit better than Wall Street expected. Specifically, we saw revenues growing at 15%, now well over $8 billion for the quarter. So a strong quarter and really a big growth rebound as they've turned this business around here. And it's getting more and more profitable. EBIT margins, operating margins at 8%. Continue to get better and better and better. Let's break down the four divisions of this company, right? So we've got server, intelligent edge, hybrid cloud, and finance. Finance up 2%. We're going to kind of skip. We'll take a look at that in a second, but let's go through them really quick. All right, server revenues. $4.7 billion, growing 32% on a year-over-year basis. That's all about the AI business and these guys having really strong success offering AI systems to their customers, including those with some NVIDIA chips. Although the best, hottest stuff they got at the very end of the quarter. So as strong as that growth was, there's suggestions that that will get even better. And with a 12% operating profit, why not? Intelligent edge, that was $1.1 billion. That was down 20%. That's networking equipment and software, networking services and software. That business has been kind of flat for the entirety of this year, maybe different from what we've seen from other competitors, maybe certainly in line with what we've seen from Cisco, but maybe not what we've seen from other competitors. So it's something to keep an eye on there. Maybe the only part of the business that wasn't super strong. Hybrid cloud up 18%. That business going up against the likes of Amazon and Google and Oracle and Microsoft Azure. So strong quarter, 18% increase there with, again, 8% operating margins. Pretty good. And financial services, as I mentioned, up 2%, but a very profitable business in terms of return on equity. One of the things I was looking for here is what's happening with our GreenLake business. And that business is infrastructure as a service, management of hybrid cloud environments, security and compliance stuff. They're competing with Dell and Cisco and AWS and Azure and Google and products within those big companies. And what we saw there is they're really adding customers nicely. They added 2,000 new customers in the quarter for this business, so that it's gone in 2 years from 25,000 customers to 39,000 customers. So they really are making a big run at this big business that has been so good for their competitors, also good for HPE. But the big takeaway for me here was really about AI. Is HPE going to be a really consistent, strong player in AI? And we're seeing they are. They did $1.5 billion in the quarter in 13 weeks. $1.5 billion in AI system revenues. And a chunk of that was services, but most of that was selling products. So very strong business that, again, a year ago was only doing only $400 million. Now $1.5 billion. That business is growing really fast and is really strong for HPE. So how did the market do when these numbers came out? Stock went straight up, then straight down, then straight up again, and kind of ended flat in after hours trading. And so for the year, the stock's up 35%, which is good, kind of right in line with a little bit better the S&P 500 is doing. There was a disconcerting note in these otherwise strong results, and that was the backlog number. So their AI systems backlog went from 3.4 billion down to 2.4 billion. So you wonder what's up. Revenues are way up. We all know the world's spending to build up AI systems. Why would HPE say this backlog number dropped quite a bit? And the company did put a note in there saying, oh, well, after the quarter ended, we got it back up to 3.5 billion. So what's up? There were a bunch of questions in the conference call. Here's CEO Antonio Neri talking. Antonio Neri, friend of the show. He's been on the Drill Down podcast in the past. We hope to get him in the future. But HPE CEO Antonio Neri talking about that weird backlog number and how they took some conservative steps to actually lower that number.
Orders during the quarter were in line with our expectations. In fact, we booked $1.2 billion of new orders in Q4. However, we debooked a large order, which was $700 million during the same quarter, because we had concern with a specific customer. And, we proud ourselves of a very strong control in this environment. And we continue to be very vigilant about how we engage and making sure we manage the risk. And we felt that order carried a lot of risk, and therefore we felt it was very prudent to debook it and focus on other areas of the business. And that's why as we keep going throughout the next few weeks, up to yesterday, we ended up with a backlog now, which is more over the $3.5 billion. So that's what happened. It has nothing to do with competitive. It has nothing to do with everything else. We had a concern with a specific customer, and we decided it was prudent to debook it.
So those bookings were debooked, but new bookings have filled that hole. Let's talk about that here when we look at these numbers. So Q4 earnings summary, what you really want to know about Hewlett Packard Enterprise. They had a really strong quarter, over $8 billion in revenues, a record year and a record quarter for this company, such that it saw 15% year-over-year growth in the fourth quarter. But the drill down earnings bite, the one number that tells you a whole lot, is the AI bookings number, the revised AI bookings number that came after the quarter. They say, don't worry, the number was down at the end of the quarter, but afterwards, it was at $3.5 billion. There's the bite, the one number that tells you a whole lot. All right, thanks for checking out Drill Down Earnings. I'm Cory Johnson. Follow me on X at Cory TV and subscribe to us on TikTok, Instagram, YouTube at Drill Down Pod. We appreciate it.